Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, we got the stock market making new record highs almost every day, right? I mean, it just won't break. It just keeps going new record, new record, new record. And you can tell, look at the HYG, new record, new record, new record. For those of you who don't know, HYG is the junk bonds. These are bonds of corporations that they don't bring in enough money to even pay the interest on the bonds. They have to borrow more money to pay the interest on the bonds so that these junk bonds can be for sale. I mean, it's incredible the liquidity that they're pumping into this market, pushing it higher and higher and higher. I do think we're going to get a pullback at some time, but who knows when. But eventually, this market's just going to go higher and higher and higher until the whole thing blows up, and it will blow up. Now, this is a very exciting week we have right now, right? I mean, we got the Federal Reserve coming out. They're going to lower interest rates. They're coming to the rescue. They're going to rescue the stock market. I'm not sure if you can rescue a stock market that makes a record high every day, every day, every day. They're pouring the gasoline on it. Let's get it to go up higher. Look at gold, record high every day, outperforming the stock market, taking off like a moonshot. Now, I'm not really a moon boy, but one thing that's going to do a moonshot is gold and silver. It's going to be fascinating. Look, you get the Fed coming in now. They're going to cut at least a quarter basis points. A lot of people think they're going to cut 50 basis points. This is going to send gold to the moon. Now, we may get an initial pullback because everybody knows that the cut's coming. So you're having this run up every day into the news, and then they sell off on the news, and then it goes higher after that. But look, there's a problem out there, right? Now, why are they really going to cut? It doesn't make any sense. Everything's at a record high, record high, record high. Let's get it up higher. Now, look at inflation. Inflation by their own numbers, 3%, right? We've been above their target rate of 2% for the last 5 years. We've been above that, right? And now we're at 3%, and we're not headed lower. We're headed higher. So let's cut rates. It's just wild to me, right? So they got the inflation going up, and the tariffs, they're going to kick that inflation up higher. They're going to kick prices up higher. The rate cuts coming, that's going to kick prices up higher. And look at now, they say they're going to cut the rates because of the job market, right? Now, they do have a problem. I agree with them, right? If they cut the rates, you're going to see inflation take off. If they don't cut the rates, you're going to see job losses. There's going to be a lot more. We've already had 800,000 layoffs this year. We're going to probably come in 1,200,000, 1,400,000, 1,400,000 layoffs, right? 1,400,000 layoffs. That's a lot of layoffs in 1 year. So they got to do something, right? But if they cut that rate, you're going to see inflation. Now, this is what's known as stagflation, right? I mean, this is stagflation on steroids because we're losing all these jobs, which is actually deflationary. I will agree. People lose their jobs. They can't spend money. It's kind of a deflationary force, but you cut the rates and you keep printing the money. Right now, it's incredible. I mean, just look at the debt clock. I mean, it's going up $500 billion a month. $1 trillion every 2 months. The debt clock just keeps going up and up and up. They're just pumping liquidity into the marketplace by printing money. And now we're going to cut rates. Now, I was having this conversation with this wealthy gentleman, right? I mean, he made his money in the hedge funds, and he thinks that they have to cut rates down below 3%, get them under 3%. Now, he doesn't think inflation's a problem. He thinks 3% inflation is very cheap, and he thinks that's going to have to go up to 5 or 6% inflation. I go, but that's going to hurt so many people. Now, he was arguing that's not going to hurt the people because they're going to get all these raises to match the price of inflation. It doesn't work that way. Inflation takes off. Your wage doesn't take off. Your wage stays right here, but inflation takes off, and then you can't go out and buy things. But I want to talk about, let's talk a little bit about the gold and silver market. What's going to happen when it does the moonshot. Now, initially, like I say, you may get an initial sell-off on the rate cut because they know it's coming, right? So we've been bidding that gold price up. We've been bidding the silver price up, expecting the rate cut. And then when the rate cut happens, sometimes you get a little, just a little pullback. It ain't going to be much. It's nothing to worry about. If it does pull back a lot, buying opportunity, right? But I don't see it pulling back much. I see it going much higher. Now, why do I see that the moonshot's going to happen? What makes gold really take off? Right now, I keep saying how gold is pegged to the debt market, and it is. It's pegged to the debt market, right? The more debt we got, the higher the price of gold will go. And that debt, you can watch the debt clock. If that ever goes in reverse, you sell all your gold, you sell all your silver. But that debt clock is going forward, right? It's going forward $1 trillion every 2 months. It's fascinating just to watch it. But what really makes gold shoot up, right? What makes it shoot up? Well, that's when the interest rates, real interest rates, go negative, right? When you get real interest rates going negative. Now, a lot of people say I talk about different terms, right? Nominal terms versus real terms, right? Okay, nominal terms just means in terms of the dollar, right? In dollar purchases. In terms of the fiat currency, house prices have stayed like this. In real terms, in terms of gold, they've already dropped 80%, 80% in the last 20 years, 50% in the last 4 years. I mean, that's incredible, right? I mean, they just crashed. But in nominal terms, which is the fiat system, which is the dollars, you keep printing those because they can't have that price of your home go down. Then they couldn't get the property tax. They can't have that drop down. They have to keep printing the money. They have to hold it up in nominal terms, in dollar terms. But what are they doing? They're debasing the currency. The currency is losing its purchasing power. So in terms of real money, in terms of gold, your house has dropped 80%. In terms of gold, the stock market has already dropped 70%. And it's going to continue to drop a lot more in those two things. But when gold really takes off, and it's going to do a moonshot here, 3,600 is nothing, right? Is when the real rate of interest. Now let's talk about the real rate of interest. Now, okay, now let's say they're telling you that we got 3% inflation. They're giving you 4% on the bond. So they're saying to you right now that the real rate of interest, you got 4% they're paying you minus the 3% inflation, you're getting a 1% real rate. Well, I totally disagree with that. Look, everybody needs to live in a fake world because you can't handle the truth. Mainstream media won't give the truth out because nobody can handle it. Nobody wants it. People want to live in a fake world, right? Well, look at inflation. It's not at 3%. You measure it the way they did back in the 80s. We're running at 8% right now. 8% right now. So you got 8% inflation right now, and you got 4% on the bond. So you take the 4% minus your 8%, you're down here at negative 4% real interest rates, negative 4%. But what are they going to do? They're going to cut 1%, 2%. So we're going to drop the interest rates down to 2%. Inflation is going to go from 8% to 10% to 12%. And you're going to have a negative real rate of inflation of 8 to 10%. Gold will do this moonshot. But you see, people can't handle that. They can't handle the truth. So what do we do with inflation? We got to take out things that cause inflation. We'll take out housing. We'll take out food. And then we can say that inflation's only 3%. We can't handle the real number anymore. What do they do with the jobs numbers? Look they misrepresent them by over 1 million for the year, right? 916,000 they were off by. Why? Why do they do that? Because people can't handle the truth. They want to live in a fake world. They want to live in a metaverse world. They want to live with fake gold, that Bitcoin, right? That's the fake gold, in my opinion. That's what they call it, digital gold, right? They'll pay 110,000 for that. But the real stuff down here at 3,600, you're going to see a flip-flop in these numbers. I'm telling you, look out, look out. You're going to see something that you will not believe. Gold is going to do a moonshot because interest rates, real interest rates, are going to go negative double digits, negative double digits. Why? Because they're going to lower the rates from, well, right now the bond's paying about 4%. I say they're going to lower it down to 2% over time, right? Because of Donald, he's going to fire Jerome. Jerome's not destroying your purchasing power quick enough, so he's going to get fired. He wants Lisa Cook. Get her fired. Look at, she forged her documents on her home mortgages. Look, I got news for you. I'll tell you, people that go in and buy a second home, which is what Lisa Cook did, about 8 out of 10 of them declare it as their personal residence. What do? They'll even tell you at the mortgage company, just say it's your personal residence. That's how we're going to get you the lower rate. And then if anybody asks you, just change your mind and you decided to keep your personal residence. You see, when you bought this house, you were planning to sell the personal residence and make this your personal residence, but then you changed your mind. 8 out of 10 people do that who buy second home, but yet they're going after Lisa Cook for that, trying to get her thrown out of the Fed so that Donald can put his people in and get rates lowered to, he wants them 1%, but they'll eventually lower it to 0%. Now, what will this do to the housing market? Everybody thinks that it's going to make the houses explode higher. They think they're going to take off. Dave Ramsey will tell you we're going to the moon with houses. No, we're not going to the moon with houses. We're going to the moon with gold and silver. I know a lot of you can't afford $3,600 for an ounce of gold. It's really $3,800 to get a physical ounce now, but you can afford $40 for silver. If you can't afford $40, go knock on your neighbor's door and go, hey, I'll mow your front lawn and your back lawn. You just give me $40. Then you take that $40 down to the coin shop, right? That's all you do. If somebody, you can do a side hustle to get $40. You can invest in the cheapest asset on the planet. And that cheapest asset on the planet is going to do a moonshot. It's going to go from $40 to triple digits, first of all, but that triple digit's not just going to have a 1 from. I'm calling for a 3, but a 2 is almost guaranteed. Why? Well, you got all the short covering coming into the silver market. All these banks are short silver, and they're getting their butt handed to them right now. And they're going to have to do something. They're going to have to unwind these positions. That's going to send silver from $40, because they've been manipulating it low all these years, but now they're going to be the bag holder, right? Because they got these short positions on. They're going to have to unwind them. They'll unwind at 40, at 60, at 80, at 100. They'll be really unwinding them at 200. That's why I say it's going to overshoot 200, probably hit 300, and a lot of people are calling for $1,200 silver, which it would not shock me if that happened, but it's going to do a moonshot along with gold. Now, why is your house not going to do the moonshot? Well, you see, here's the thing. Now, what they do back during the great financial crisis, 2007, 2008, right? Well, your house was in free fall. It's coming down. It's coming down. What they do to rates? They cut them as fast as they could. It didn't stop the houses from falling. It did not stop them from falling. This time, it's really not going to stop them from falling. And here's why. When they cut those rates back, 3, 2, 1, 0, long end's going to be going up. But Mike, they're going to do yield curve control. The Federal Reserve is going to come in and buy the long end of the bond. That is correct. They're going to be the only buyer of the long end of the bond. We've already had failed auctions out there in the long end, in the 10-year, in the 20-year. The Fed had to come in and buy $500 billion worth of these things because no one else is buying them. No one else is stupid enough. But what's that do? That's inflationary when they come in and print money to buy the long end of the curve. They're going to do that, absolutely. What's inflation going to do? Going to keep going higher. They're going to buy that long end down. They're going to try to hold it down under 5%. Where's inflation going to go? Because they're going to have to print the money printer to get the money to buy the long end, to hold it down. So that's inflationary. What's inflation going to do? 12, 14, 16%. Hyperinflation is going to come. But Mike, we got the reserve currency. The reserve currency has never, ever hyperinflated. I got news for you. We don't have the reserve currency anymore. The reserve currency is gold. You look at the central bankers, they own more gold than they do dollars now. This is the first time this has happened. This is very serious. Gold is overtaken as the reserve currency. The dollar is going down, down, down. Your purchasing power circling the drain. They're flushing the toilet on you. It's just going to get flushed away. You're not going to have purchasing power. You have to get in real money. I know gold's expensive. It's It's a bargain though at 3,800. Going to go to 12,000. Look, it'll be silver 6,000 by the time the Donald gets out, and it's going to double from there. Going to easily double from there. You need the real money. That's where your wealth should be stored. You can't afford 3,800. You can afford the $40 silver. And silver is not going to stay here very long. Maybe we get a pullback. Maybe we come down 39, 38, 37. That'd be a gift if that happens. And I'm hoping it does happen. Get a lot more people. And a lot of people are starting to believe that Tall Mike's not just this crazy old guy with a microphone. He actually knows a little bit. So I'm telling you, gold, silver, going to do the moonshot. Yes, they're going to cut rates this week. They're in the rock and the hard place. They're trying to cut the rates so that unemployment won't just shoot up because the job numbers, the layoffs, the jobs are going away. But as soon as they cut those rates, that inflation number takes off, sends the long end of the curve up, sends your mortgage rates up, sends your houses down. Gold's going to be the one doing the moonshot. Dave Ramsey tell you gold's just a pet rock. Well, Dave, you're wrong on this one. He tell you that get out there and buy that real estate. Look, you got to do you. I'm not telling you to do anything. I'm just telling you what I'm doing. I'm in the real money because that's where I think you should be. Look, do I think you should go out and buy a house right now? No, I don't. Would I sell you a house? I'm a real estate broker. That's my job. I tell you, don't do it. Don't do it. Don't do it. If you got one to sell, I'll sell it for you. That I do. Yes, I do that. Anyways, I'm Tall Mike. You like this stuff? Give me the thumbs up. Punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.